what's up, you guys? Welcome to another amazing episode with Stock Talk with your girl, Dr. E and David, where we give the breakdown of the stock market and give you knowledge you need in order to make informed decisions on your financial freedom. I am your host, Dr. E.
And I'm David, once again. And today we're going to be breaking down the strategy behind three investing styles: day trading, swing trading, long-term trading.
Yes, exactly. And please remember that we are not financial advisors.
No.
This is not financial advice.
Not at all.
All trades come at risk. Please remember all trades come at risk. And this is not a recommendation to sell or to hold. All right, you guys. So looking at day trading. Day trading is fast growth, but it is risky, okay? Please know it is risky. It is high risk, and you also have high taxes. But here's a good comparison when it comes to $1,000 over time. Normally, a day trader likes to get about 1 to 2% per trade. So if you have $1,000 times 1.01, then that means every trade is going to be about $10 to $20, depending on if you're trying to get the 1 or the 2%. Okay, and then after about 20 trades, you'll have $1,200. That's $1,220, and then after 250 trades, you will have that's basically a year trading. You will have $12,000. But this assumes that there are no losses, no fees, and no taxes. And it is very hard to achieve actually in real life. Because as we all know, stuff always happens.
Always. And then we got swing trading, which is a moderate short-term growth bar.
Over about 3 years of time, okay?
Yeah, which is slower than long-term.
Mm-hmm.
So swing trading is a 10% gain per swing. So if you got $1,000, you'll get $1,100 in one swing. If you swing in per year, if you do 5 swings a year, you'll end up with a $1,610 after a year. Over 3 years, compound interest at 10%. Swing 5 times a year, you'll get $4,640. Still taxed in short-term capital gains, same as income tax.
Exactly. And then we have the long term. If you have $1,000, by year 1, you'll have $1,100. By year 10, you'll have $2,600. By year 20, you'll have $67,000. By year 30, you'll have $17,000. The lower long-term capital gains, taxes, compounds, works in your favor, and really it's just a nice slow trend to the upside. Now, granted, this is also based on what you are investing in, okay? Because if you're investing inside somebody like, let's say, NVIDIA is making monster gains right now.
Right.
There's no way you will only get 1%
Yeah, right.
within that stock. So it definitely, it definitely depends on the stock. You could be doing QQQ. You could do, any sector, and definitely make sure you're diversifying your sector to make sure that even if your even if a favorite sector of yours is down, it's okay because you diversified your portfolio. Okay. So once you do decide, hey, it is time for me to buy in, you need to look at some formations, some trend lines, or just some indicators in general. Okay. So a trend line is just saying, hey, I see here that it normally hits here at the bottom, and when it hits this line, it's going to go back up. So of course, I would suggest to buy in here. Then of course you're able to see this formation. Once you see the formation and you see the trend line, and then let's say if it's right around like another indicator, at least have 3 indicators that's telling you the same thing, okay? And it's talking to many different charts and it's all saying the same thing. That it's either about to go flying up or flying down, depending on if you're buying calls or puts. Once you decide to do so, then know, hey, so if this was $50, and here, if this ends up being $100, or actually, you know what? Let me go ahead and go to an actual real chart, so I can show you some contracts that you could buy if you do see, hey, opportunity to go ahead and buy in and ride that wave. All right, you guys. So here is Google. We have Google on the daily chart, and of course, there's other charts you can do. You can look at the weekly. You can look at the monthly. It all depends on what you are actually trying to achieve in the market. Okay, so if you're looking at the monthly, I would definitely say, please buy further out. Do not buy a monthly contract if you are buying stock options versus shares. All right. And then if you do buy on a monthly chart, definitely let's start looking at leaps. Or on a weekly chart, you need to be looking at leaps or at least 6 months out. Um, but nonetheless, if you went ahead and said, "Hey, one of the indicators is showing me that I have my Bollinger Bands out, and they're actually outside of the Bollinger Bands," and of course you're going to start thinking, "Okay, when is it going to be time for them to start falling back in?" Because we all know, in regards to Bollinger Bands, it actually stays within the Bollinger Bands at least 95, 97% of the time. As you can see, when it came out here, it comes back. It came back down. Take 144. So it came out the Bollinger Bands, or definitely touched that 209. And this is Google, okay? It touched that 209 and fell all the way to 143. Right now we are at 255, 256. It may go ahead and come back down here around 203. It because it definitely has some support around this area. But please make sure you do your due diligence and read the chart to the best of your ability, okay? Don't try to read it based off of somebody else's. Please make sure that you play to your own strengths. Why? Because you need to know why you decide to jump into that chart to actually play. Um, to actually invest. So if you look onto the daily chart, also it does have this large gap right here that could also cover. So that number I told you around 203, 200, but at least definitely 211. It should be falling somewhere within this area. It's going to have some issues around 240. It's going to stay stagnant around this area, and once it does hit, it's going to try to go back up. Then it's going to hit here. It's going to stop because it's going to be some resistance here, and then retry to cover the gap. Once it does cover or makes it past 244, enters the gap, then you already know it's going to come past here. Do the same exact thing. Hit this resistance, come back up a little bit, and then go ahead and go down. All right. So if I was looking at Google as an opportunity to buy to buy a put, and I would say definitely for the short term. Why? Because when people are at all time highs, you are definitely playing the guessing game. But you can go here. You already have one indicator going for you. We could do another one where we're actually following and doing a trend line. All right. So as you can see on the trend line, that's one thing saying yes, it's going to go down because it's hitting the trend lines already. And then another indicator, yes, it's going to go down because it's outside the Bollinger Bands. And then yes, normally my other indicator is, hey, it's hitting this leg in, leg out. But since it's at all-time highs, you actually don't have that confirmation. So definitely the trend line and Bollinger Bands has got to be your other indicators. And then also sometimes it's always nice to look at the value, how much people are actually buying and still believing in this stock going up. If the momentum is high, definitely go ahead and go with the momentum. Do not stand in front of a moving train. It is not a good idea. But once you finally do see indicators saying that, hey, it's going ahead and go down, then that's cool. So let's go ahead and go to the calculations. So let's say, hey, it hit right here. It's going to get stagnant about 220, 251. That's why I pushed back up a little bit that day. But it will most likely definitely come down to about this area if you are a swing trader, or say we'll just say swing, to 211. So from 255 to 211, how much would that be? Well, it also depends on the contract that you decide to buy. Or if you just want to, definitely play it safe, you can see that it already tried to come and cover this gap and it did not do it. So it popped back up. It's going to definitely try again. And since it already has been touched, then you already know that, hey, it is not as fresh as a gap and it may not force itself back up again. So once it does come down to even just 245, which is a $10 move, if I decided, hey, let me go ahead, and let's say I was able to go ahead and get a good options contract. So let's say trade. If you're gonna pay a $10 move, Google is a pretty big company that could do that probably in about 1 or 2 days. Or to the next amount, which is about 212. It could definitely do that for the next couple of days. I would encourage to please at least buy 60 days out, okay? So at least 2 months out, okay? So if you were to spend $1,500 on Google, at least you'll be able to see that, hey, the delta right here, as you can see, is 54. So 54 until it gets, I'm sorry, I'm tripping, you guys. I'm going to go to puts. So let's redo. So we want at least buy at the line, at minimum, okay? At least buy at the line. But this delta, if I did buy it down here, it's 45. But if you can buy and afford a better delta, and please make sure you mind for time. Why? Because I don't know about your patient levels, but mine is shot. So I like to buy for time just to make sure that I am good and have enough time to make sure that it does come down. And since it's out of so many Bollinger Bands and it's hitting the trend lines, it will most likely come down. So let's say if you had $1,600, let's click here, scroll down. Let's see what the delta is. The delta is a 51. Sometimes I would like to even go above that, but it's all based on what you can financially afford. But please at least buy above the line. As you can see, even if we bought this one right here for $2,500, the delta is a 67, and the strike price the break even is $249. Okay, so we go back to the chart. $249 is about right here. Okay, so it will have to go 10. It will have to go. Get the calculator. So it would have to go from 255 to 249, which is the $6 move. So at $67 for your delta, 67, you just times 67 times 6, that $6 move. You'll make $400 about the time it gets to your delta. Once it gets to your break even. Once it gets past your break even, then we said about 245, definitely, until it at least decides it wants to go ahead. Actually, let's go to this to the wick that tried to go through. So $46. All right, so now you will make $100 per dollar that it decides to go down. That's past your strike price. Okay, so you already have $400, and then you'll make on the extra $4, $3 to $4, you'll make $100. So you'll have $400 plus the 402. Now it depends on how many contracts that you want to buy. So now we're at $802 for one contract. If you have enough money, or if you would like to, hey, I want to buy 5 of them. That $5 move will be you profiting $4,010. If you want it to be a long-term trade where you know it's going to come back down here within some point, into to 211. Then you would look at the contracts out further. I don't know, 214. Yeah, around 214, 209. You would look at further out contracts. So not 2 months or 60 days out. We would encourage you to go ahead and look at contracts that are, so not 60 days, but let's do like 117. Okay. 117 days out. So once you were able to jump in and buy this contract for a put. Hold on, I'm looking for the midline. Okay, the midline. Oh, okay, I'm not tripping. Okay, so the midline is right here. It'll be $1,700. But of course, you could buy a deeper in the money contract if you like, which is always the best ideal. Just because you want to give yourself more time where theta is not killing your contract. Okay. So once it does decide to go down further, let's say if we did do the $1,700 contract. And now think about it, we have until January for it to hit those numbers. It has to hit at least 44. I'm sorry, your delta will be a 44 and your break even will be 238, right? All right, so let's go back to the chart. So right now we're at 255. You have to get to 238, which is a $17 move. So $17 times 44, that will be $748. And when it gets to the 38, so 38 is about here, and that'll be covering the gap at 241 that it has on weekly chart. Then once it decides to finally pass that, then to get down to the area that we said at the most support around 207. So we already have 748. So from 238 to subtract two, let's say the highest at 214, that's 24 extra dollars. Move that we are waiting on. So if you times 24 times 100, that's $2,400 plus the $748 that you would already made. So on that contract that you spent $1,700 on, you would make $3,148. So you have to definitely make sure that you are looking deep into these contracts to verify and make sure that, hey, I'm on the right path. That it is worth taking a risk. You always want to make sure that you are taking that you're buying into something where, hey, I know within this time period, it is great to go ahead and take the risk and jump in. And you can do the same thing for a lot of other companies as well. That's on its way up. We could look at TTD. If you don't like buying puts, this would be a great place to go ahead and think about buying a call for this company. It's definitely at an area of support. But definitely just watch out for them so you know, hey, it's my time to shine and jump in. So any move, this is the weekly chart. So they hit this area to try to come back up some. So from here, because as you can see, normally when it does come down, it hits right where the resistance and the last highs were. So here, so it stopped here. Like next time when it comes up, it'll most likely stop here at $79. So even if you want to buy a leap on this, I would say a leap, just for a year out, then definitely about time it hits 80, it's at $44. You can definitely make a killing on that as well. So we could type in TTD real quick. The trade desk. You say you want to trade, buy it for a leap out. So Google is a good example for what a swing option would be and what your calculations would be. When it comes to TTD, this will be a great leap, long-term variation where you're seeing it's within a leg in, leg out. You're also seeing that it's outside the Bollinger Bands and it is at a trend line. So 365 days out is $1,200. And as you can see, it's actually cheaper to go ahead and buy this company if you guys wanted to. The break even is will be $55.50, and it's 1,300, and your delta would be $67. All right. So if you go back to the actual trade, to the chart, $56 is about right here, which is actually pretty good. You see, it has been here plenty of times before. So you know, from 44 to 56 that you would make. What was that delta?
Yeah, 67.
67. Yeah. So at 67, we have it at 44 right now. Once it gets to 56, that's a $12 move times $67. That's $804. Okay. As you can see, we know it likes this area. It could definitely get here. Now, we don't elite, so we got some time to wait. So the goal and hope is that it definitely gets at least up to here. Why? It's been here before. There's some resistance here. So we already know that it's a good place for it to go and then fall back down if it wants to. So once it gets here at 80, we already calculated up to 56, which is $804. So from 56 subtract 80, that's $24. So 24 times 100 is $2,400 plus the $804 that you already had. So it ends up equaling to be $3,204 on that one move. All right, you guys. So just little things like that. That's a great long-term calculation move where you can say, hey, you know, hope. Let's say if it doesn't by December. Let's look. Let's see when it normally do it. If it does something like this by, let's see, you drop down in August. What was this? If it decides to drop down and then finally go back up, it only normally takes a couple weeks after it has fallen to decide to turn back around and go back up. So it has been falling for a little bit, hit resistance, and then has fell again. So as you can see, it only takes a couple weeks for it to go ahead and hit resistance and go back up to this area. But please keep your watch on TTD, because even if it decides to fall, then you guys just keep on watching, okay? If it decides to fall at 35, and that decide to fall $9 more, that's just it's just better for us knowing that it's about to go back up and hit 80. Why? Because that's obviously where a lot of sellers are at, more than anywhere else on the chart. So definitely make sure you guys are doing your due diligence when it comes to the stock market, and make sure you're looking for the signs, even for a company like, we can say QQQ, or if y'all don't like volatile, you can go SoFi. Okay, we can do SoFi. Even if we're doing short-term day trades on this chart. Where did it go? Where did it go? Same thing from the 1 minute chart to the 15-minute chart to the 4-hour chart. You are still able to see. You are still able to see that, hey, it is definitely outside its Bollinger Bands. Yes, it could definitely hit that area and follow the trend line continuously up to about 29.55, or about time they open until Monday. That'll be around 30.20. But since it's outside of the Bollinger Bands, it will most likely come down some. Just make sure you're still looking at the same things. Look at the formations, the leg in, leg out, the support areas and the resistance areas. That is really the power areas, where it has the most power. And then realize that, hey, this may be a good time. This will be a good time for me to get out or to jump in. So if SoFi were to come down here, this would be a good area to buy. It's a good area to buy a call. Why? Because it has this power right here from this bar, and then it has resistance where it doesn't want to come down from over here. But all your confirmation is definitely on the bigger chart. So from the 4-hour to the daily, as you can see, hey, 28.25 seems to be a good resistance areas to high 27s. Same thing here. It's telling you the same exact things. Okay, so from this resistance area around low 28s to actually just really low 28s. So just please keep your eyes open. Please do not assume it is jumping at anything. Please make sure you do your due diligence and look for the resistance areas. Look for haze outside the Bollinger Bands, because 90% of the time it's supposed to be inside of the Bollinger Bands. And look for the trend lines or whatever other indicators you like to use to let you know, hey, it is about to, skyrocket, or it's about to come down some. But either way, make sure you make your confirmations and your confirmations organically specific to you and your needs and how you are as a trader. Appreciate you guys staying on. Make sure that you get a stock journal if you do not have one.
Link in the bottom.
Make sure you please comment and like and subscribe.
Please like and subscribe.
Yeah, please put anything inside there that you may like us to go ahead and go over. If you are looking at another chart and say, hey, I think this would be a great idea for everybody to go ahead and jump into, please feel free to do that as well. And then, of course, please join the stock community, where you are able to join other like-minded, amazing people who are willing to say, hey, I want a different financial future for me and my family.
That's it.
But until next time, we appreciate you. Thanks for clicking on.
All right, keep trading.
Bye. Hey, you guys. We really hope you enjoyed that last episode.
And if you're really ready to keep transforming, go ahead and jump into that next lab episode. The one right here. Down here, the link right here.
It's probably over here.
Or there, or here. Link, click. Go ahead. You got it.